Do you know how market structure works? Do you know how to identify the market structure before you take a trade? I'm going to show you how to look at market structure in the charts today and how to identify market structure. I'm also going to show you the system that I've used for the last 30 years in the stock market and in Forex, and the system that's worked for me and made me into a profitable trader over the years. And it's helped me with my psychology in the trading, because at the end of the day, it's all about getting your head right and getting your head around how you actually make money in the stock market. There isn't a system known to mankind that can make you profitable in the stock market. And the reasons behind that is from the dawn of time, we've got an inbuilt fear inside our bodies that prevent us from taking those emotions out and making a profit, because the fear of losing money, the emotion of losing money, is almost as bad as being chased by some phenomenal dinosaur in the ancient times. I've been doing this a long time. Come into the office with me and let's go and have a look at a system that's made me profitable over a long period of time. What you have to understand about trading in the long run is that it's a 50-50 game. I say this in every video. And if we were to toss a coin, you would, let's say 10 times, you would lose 5 times and you would win 5 times, making it a break even. But if you were to lose 1 on every one you lost and win 2 on every one you won, you would have a profit. So that's what it's all about at the end of the day, is being able to take profit on your better trades and lose less on those losing trades. I always tell you guys that the stock market is a risky game. The trading Forex is a risky game, because 80% of traders do lose money. And it's an effect in the market that just will never, ever go away. It'll always be there. So if you don't like risk and you don't like losing money, you probably shouldn't be trading. The thing is, guys, getting over the fear of losing money it's near impossible to switch your brain around. And the problem comes in with if you have a winning horse and it's 100 meters from the finishing line, guys, and I said to you, you can double your bet on that horse, you would take that bet. But in the stock market, nobody ever takes that bet. Yet, if I told you your horse is coming 6th and the winning horse is 100 meters from the finish line, do you want to double your bet on your horse that's coming 6th? You probably say no on a horse race, but you do it in the stock market. Your stock's losing horribly, yet you'd be prepared to double your bet on that. You'd be prepared to average it down, but you're not going to win anything. You're going to lose because it's going down to 0. Now, this is the problem that we have, is because it works once or twice. You average it down and it comes back and you saved and you're like, phew, relief. I got my money back. And then the third time it goes to 0 and it takes all your money out of the pot. And in geared trading with Forex and with indexes and stocks as well, it can be quite painful when something like that happens. In fact, it can actually blow your account up completely because of something as silly as that. So that's why stop loss becomes so imperatively important. It's not that important in investing. When it comes to investing, it's actually not important at all. With investing, you intend to leave your money in the stocks and never ever take it out and get paid dividends every year. And it doesn't matter whether it goes up, comes down, or whatever the case. But with trading, gear trading, trading indexes, trading Forex, trading that sort of thing, futures, that's going to cost you a lot of money if it goes against you. Pop down, go to the description, get my free Forex book, which basically you can use for futures as well and indexes. It teaches you how to trade with trends and how to follow trends and how to get in and out of markets at certain areas on certain trend resistances and trend supports. Go get that for yourself. It's free, totally free. Enjoy it. I'm not charging you anything for it. And also the blog, go down to the blog. Every day I post a trade of the day, every trading day. It's not trading advice, it's just an idea so that you can follow along and see what I'm doing in the market with a trade idea. I do it basically on the 4-hour chart, maybe sometimes on the 1 hour, so that it gives you enough time to look at the trade and also get into that trade if you want to. If I do it on the 5 minutes, you're never going to catch up. You're never going to get into the trade and it's going to be gone by the time you get there. So I do it on a longer basis, and it's effectively so that you guys can figure out how the trading system actually works and how you can use the system to your advantage in the market. it helps in that sense. Guys, let's go and have a look at the charts before I ramble on any further, and let's see how you can trade the market structure. Just want to talk to you a little bit about market structure and how you can identify it. Now, if you look at this is the Great British Pound, US dollar. It's been on a sort of bullish phase, and it's ranging a little bit around here. Now, don't forget, you can use your support and resistance. Always use your support and resistance. But I just want to, if you look at this chart, you've got to identify where you are. And effectively where you are is you're in a bullish phase. So this is going up, down, and these are your purchase points in this area. So what it actually means and what it actually looks like. Hey guys, if you like these charts, by the way, I've left you a link in the description below. I don't mind which charts we use as long as I can just have a look at a chart and do a straight line. I don't use all the indicators on the chart. These charts do come with amazing indicators on them, by the way. So what is the market structure? And I'm just going to draw the bullish one here because we are in a bullish phase. So you got it going up, and then it goes a little bit down, and then it goes up, and then it goes, ooh, no, I've lost the arrow there. And then it goes a little bit down, and then it goes up, and then it goes a little bit down, and then it goes up, goes a little bit down, and so on and so on. But it never really goes in a straight line like this, but this is just to give you the picture of what you actually get. And what you're looking for is you're looking for buy areas such as this one, and then there's another buy area such as this one, and then there's another buy area such as this one. So these are the areas where you're going to buy it. But how can you see these areas when you're actually buying into this particular stock? And simply take a trend line and draw it through. And the trend line gives you the spots where you're buying. That's your general area. That's your general area. That's your general area where you're going to be buying your next purchase on that particular pattern. So that's your structure, and that's what you're looking at. It's bullish. It's a bullish structure, and the same applies when it goes in the reverse. And I'm not going to insult your intelligence and draw the reverse of what I just drew, because I hate it when people do that. You know as well as I do, whether I draw this in reverse or not, it'll make the same sense. When you're going in reverse, you're going short, you just do the opposite. This is going up in a long scenario. So what you do, you draw your trend support line straight through, and it's going to tell you exactly where you need to purchase. So you would have needed to purchase there, you would have needed to purchase there, and you would have needed to purchase here. So now what you're doing is you're waiting for that to come into that level, and it'll take you on to the next scenario. Simple really. And the same thing applies when you're in a range. If you're in a range, what you're looking at, this is going in a range. So let me just give you an idea of what we're talking about when we're in a range. What happens when you're in a range? It goes up, it goes down, it goes up, it goes down, it goes up, it goes down, it goes up, it goes down. Shall I keep on doing this? No, let's not carry on doing that. And then you've got a support level there, and you've got a resistance level there. And when it's trading in a range like that, you're buying there, you're selling there, you're buying there, you're buying there, you're buying there, you're buying there, you're selling there, you're selling there, you're selling there. Simple as that. In a range, you're buying at the bottom and selling at the top. That's your support and resistance. So resistance at the top, support at the bottom. Not rocket science here. So that's your structure. And if it's going up, what's your structure? That at an inverse. Quite simple, really. And that's support and resistance. Same thing, guys. Exactly the same thing. Whether it's traveling in a bullish phase, whether it's traveling in a bearish phase, or whether it's traveling along and keeping itself in a straight line, it doesn't really matter, as long as you can see the structure when you come to take the trade. Now, this, for example, I just put gold in because I saw it a little while ago, and there's something that you need to look for here. Now, gold has gone straight up, and it's on a high, and you've got this market structure telling you up, down, buy, and it's telling you that this is coming back into a buy position. Now, when you take this buy position, what you've got to be careful of is it's not going to go much higher than that resistance level. And why is that a resistance level? This is creating what we know as a double top. There's a top, and there's another top developing. What you've also got here, you see that? You see what happened with those two candles there? It's what I call a pincer top. Right at the top, there's two little candles together, one straight up, one straight down. There's another one that's just developed here, a pincer top. And what happens after a pincer top? That's what happens. She comes flying straight down. But it's not only a pincer top, guys. This looks very much like it's creating what we know as a double top. So if you see a structure like this where it's gone up nicely, up, down, and you're thinking, well, I'm just going to get in and follow this, be very careful to make sure that you don't have this scenario creating. Because when you
you sit with a double top like this, the only way I would take this trade long now is if it actually breaks that level and goes higher than 24.50. Then I'll be sort of comfortable that it's broken the double top. And also with this pincer top sitting here, I'd be very careful of that as well. That's why in previous videos, guys, I gave you the video to look at with the candles on it. Just have a look at the candles. These patterns can be quite important clues as to what's going to happen next in the market, because while it's great, up, down, we're taking our trade and, you know, we're going long and everything's fine. If you miss this, it could be quite expensive. And if you miss it every time, even more so. So that looks like a double top. But what could happen here? What could also happen here is you could have, this is now a big cup, right? Here's a big cup. And what could happen now is you could have a scenario where this comes down a little bit and then goes up here. What you've got then is what we know as the cup and handle. And with the cup and handle, it'll go straight up. But these, I'm talking chart patterns now, not so much market structure. But if you look at the market structure, you must look at the patterns at the same time. Because when you're looking at this market structure, you can spot patterns in the market. And that's why before you take a trade, take a step back, make it a sort of bit smaller and just have a look at the pattern and see what you've got. Because if you're taking a short here, you're going against the trend, but you've also got a pattern that's developing. So you just want to confirm if you're going short, if it's generally hit the resistance. And when it's so high and it's been going so long for such a long time, the best way to test that is just to wait for it to retest that area. So draw that in and say to yourself, okay, I'm prepared to take a short against this trend, but only if this goes down a little bit, comes back up, test that, and then decides to go short. Then I'll have a look at that particular kind of trade. Otherwise, stay with the trend. The trend is your friend always. Always stay with the trend, because when you go against the trend, it always becomes kind of painful, let's say. Let's have a look let's see, what have we got? Euro, US dollar. How does that look? Yeah, you see there's some market structure here as well. There's a big support at the bottom here, and it's bounced up. That support is very important, but there's also a big resistance at the top here. So while you've got all this market structure going up, looking really nice, I mean, this is a really nice bullish run and bullish momentum, you do have to be careful with that double top sitting right at the top there. It could cause this to go down. The best way to check that is if it breaks through the trend support.
So now you know a little bit about market structure and what you can do with it and how you can use it to your advantage, and why we need a bit of market structure. When you're going to take your trade, and when you get up and you go and look at the trade, you can now just glance at the chart and you can see what the market structure is showing you. And the trouble with market structure is it's not always clear on the charts. If I draw little lines, it's easy to see. But if you go and you try and actually look at a normal chart, then sometimes it's doing this and sometimes it's doing that, and it's never really clear on how it looks. So you're just going to have to get that into your head and get that picture right. But once you understand the market structure, once you understand how to trade support and resistance, once you understand how to trade with these simple systems, then it becomes much easier to manage your risk, which is what we're trying to do. We're trying to manage our risk and make more our wins and lessen our losses, because that's what it's all about. At the end of the day, is being able to make a proper profit in the stock market, become a profitable trader instead of being a losing trader. What's making you a losing trader is all these crazy fandangled systems in the stock market which just don't work for you. It's still, some of these systems can become so confusing that effectively you confuse yourself, and your brain doesn't know whether to take a long trade, a short trade, or just stay out of the market altogether. So be careful of overcomplicating the issue. You'll have these guys that'll tell you, you can't lose with a system. It's impossible. Believe me, guys, it's possible. You can lose with those systems. They're not infallible. Believe me, they're not infallible. Every system is the same. Everyone's got their edge. And if you don't overthink it and you don't put too much into those systems and you keep it simple, you'll probably do just as well, if not better, than those guys with these infallible so-called systems that turn $100 into $1 million, which believe me, it doesn't. It never does. I'm still waiting to see that one for real. If you get that right, you're very, very, very lucky. So guys, enjoy the weekend. It's a beautiful Friday, and we'll see what comes next week. Next week, I'm going to bring you some more fantastic, wonderful super videos. I'm still deciding on whether to add the weekend video with regards to looking at stocks for you guys. But if I get some requests on some stocks, I will try and add it and try and show you a little bit about those stocks, and if we can get to the bottom of a question that you might have on any particular stock. So guys, thanks for watching. Don't forget to watch the last video. Come back on Monday for the next one. Cheers, thanks, and bye.